8 months ago, I started this bull put spread portfolio with just $1,500. For the first 3 or 4 months, everything was working beautifully. The trades were smooth, the returns were steady, the repairs were easy, and I was on track to almost double my investment. Then the market pulled back and kept pulling back. And suddenly my carefully placed spreads were getting uncomfortably close to the money. Some of them even went in the money. I didn't want to close them at a loss, so I started adding cash from my savings, from my credit union, and eventually from a $15,300 60-day Roth conversion that I used to temporarily prop up the account. In this video, I'll show you how I managed to roll, widen, and navigate my way back to cash without losing money. Whether you think it was smart, stubborn, or something in between, I'll let you decide. And if you want to trade smarter than I did, my beginner-friendly, safe options trading ebook is available on Amazon for $4.99, and you can read it on your laptop, tablet, or Kindle. My Bull Put Spreads book is also available for $4.99, and it comes with a disclaimer that you probably should not trade these spreads. Right now, in the account, I have $8,861 in cash, and the liquidating value of the account is $8,152. I've closed out most of my positions, and I have one remaining spread on QQQ with an upper strike of 460 and a lower strike of 445. So I am risking $4,500 if both of these go in the money within the next 53 days. Let's look back at what it has taken to keep this account from losing money. My specific trades are pretty well documented online, or at least a lot of them are, so you can look back at those if you want to, and I can show you some of them. But right now we're backing up to a kind of portfolio view. So I started with $1,550, and I made quite a few trades. And by January 21st, I did a portfolio reset back to cash, and I had $2,816. So I had almost doubled my money in about 4 months, and I was feeling really golden. And then near the end of February, the market started really pulling back. And in order to avoid booking losses, I had to add money to the account to be able to roll my positions and expand them and get them out of the money. So I transferred $500 from my credit union and another $500 from the credit union. And then by March 11th, things were so far in the money that in order to roll them, I needed a lot more cash in this account. I had been thinking about doing a Roth conversion from my IRA. Most of my retirement money is in a Roth account, but I had some funds in a traditional IRA, and I decided to do a 60-day Roth conversion and let those funds take a stopover in this account to allow me to roll some more positions further out of the money to try to avoid locking in losses. So I started with $10,374 from this IRA. A Roth conversion isn't the same as a distribution because I'm going to be able to move these funds into a Roth account, but I still have to pay the taxes on them. So Schwab withheld about 10% to send to the IRS, but I added $10,374 to the account. And things still kept going south. I'm rolling positions and rolling them further out of the money, but in order to do that, I have to expand the capital that I'm devoting to each trade. So by March 20th, I pulled another $1,500 from my credit union. I did make a note on March 27th that I still had about $2,000 in free cash. I put in another $1,100, and then I went ahead and pulled the rest of the money out of that IRA. Schwab withheld $351 for taxes, so I added $3,549 of retirement funds to this taxable account. $2,000 from the credit union, $1,600 from the credit union. And when we got to May 6th, I was bumping up against the 60-day window that I had to move these funds to the Roth. So I went ahead and paid some money to close positions early and went ahead and moved $15,300 into my Roth account. So that's kind of a long explanation, but when I went ahead and added up everything, my total cash that I contributed to this account, starting with that $1,500, all the money from the credit union, and the retirement money that made a temporary stop there, I put $22,623.50 into this account. And then on May 6th, I took $15,300 out and put it into my Roth IRA. So the total expense and income in this account to date is $7,323. That's the total amount of cash that I have put in and taken out of this account. And when we look at the account now, if I wanted to liquidate everything right now, I could get about $81,500. So the account is still profitable, but it has been a lot of work to keep it profitable. I actually have $8,861 in cash. So as long as this QQQ position, these last three spreads that I'm trading in this account, as long as I can keep them out of the money, then I'm going to come away with a profit here. If I wanted to liquidate them today, I'd have to pay $709. So let's go back and look at some of these individual trades, or at least some of the positions. I started in October with a position on gold, and I brought in lots of small premiums on gold. Took it back to cash in October, I think. And when I added it all up, between October 29th, when I started trading gold, and February 25th, when I closed out my final position in order to free up some cash, I made a total of $124 trading bull put spreads on GLD. Next, we can look at IWM, which has been a lot more volatile and a little scarier to trade. I started with some positions on September 19th and 23rd, and kind of scrolling through here, lots of small premiums, lots of rolls. And then this month, May 2nd and May 5th, I needed to close out positions on IWM, and I had to give back a lot of my gains in order to bring it back to cash to move that money into my Roth account before the clock wound down and I wouldn't be able to do that anymore. So when I added up everything that I brought in and then everything I paid to close it out, I spent a lot of time and a lot of effort and a lot of energy to make $88.48 on IWM. But I didn't book a loss, so considering what the market's done, I'm going to call that a win. I'm going to pass by QQQ. We'll come back to it in a minute. SPY, I started September 19th. I started with lots of very small premiums when I was trading every few days, and then I had to start expanding it and having longer holding periods. And in order to free up the funds and move that money to Roth, I had to pay $570 to close out this position. So when it was all added up, all said and done, I am walking away with $166 on all of these SPY positions. So that brings us back to QQQ, which is the only ticker on which I still have an open position. I started trading QQQ on September 19th, brought in lots of small premiums with short duration trades, had to expand quite a bit when things started going in the money. And right now I have this 6 contracts, 3 spreads open. And when I add it all up, right now I have made $1,183 on QQQ. If I wanted to close it out right now, I could pay $708 to close this position and have everything back to cash. So the decision that I need to make is, do I hold this open for another 53 days, hoping to lock in another $709, or do I close it out today? The $460 strike, this is the upper strike on the position, has about a 26% chance of going in the money. It would probably cost me $712, let's say $715 to close out the position. My total cash in and out has been $73.23. And if I close everything back to cash today, I'll probably have $8,146. My net liquidating value minus this total investment would net me about $822 over 8 months if I close everything out today. And I think I'm going to do it because everything is so unpredictable and so volatile right now. I'm going to take the small win and just close this all back to cash. It filled at 240. So I paid $720 plus $390 plus $11. So now that it is all said and done, in 8 months, I walked away with a profit of $459.22 on all of these QQQ trades. And honestly, that's really not so bad. If I look back and see when I started, QQQ was at 483. It went up to 507, 516, 536, I think is the highest, and then dropped all the way back down to the low 400s. And today QQQ is at 491.35. So I'm going to call this a win. Over the last 8 or 9 months, I made $822 and got a great education about these very difficult to manage trades. I made enough to pay the taxes for the Roth conversion, and I didn't lose money on these trades. But I don't know that I'm going to be really using them anymore. So after 8 months, dozens of rolls, and a whole lot of learning, I closed every position and brought the account to cash. I made about $800 in profit, which was enough to pay the taxes on the Roth conversion. And I didn't lose money, even in a down market that some are calling a recession. Will I do this again? Honestly, probably not. It worked, sort of, but it took a lot more capital and a lot more stress than I want to repeat. Still, I'm glad I tracked it all, and I hope seeing it helped you understand what it really takes to manage a spread portfolio through a tough market. If you want more behind-the-scenes content like this, be sure to subscribe. And if you are just getting started with options, my $4.99 Kindle ebook is a practical and hype-free place to begin.